Dear friends, welcome to the webinar for the launch of Piramal Enterprises Limited's public issue of secured, rated, listed, renewable, non-convertible debentures. I, Ajay Manglunia, representing JM Financials Limited, welcome the prominent speakers from the issuer, Piramal Enterprises Limited. Mr. Jairam Sridharan, Managing Director from Piramal Capital and Housing Finance Limited, and Mr. Yash Nadkarni, Chief Executive Officer from Piramal Enterprises Limited. Mr. Jairam Sridharan holds a Bachelor's of Technology degree in Chemical Engineering from IIT Delhi and postgraduate diploma in management from IIM Kolkata, where he was awarded a Roll of the Honor for Academic Excellence. Mr. Jairam also have over 2 decades of rich domain experience and specializes in the setting up of the scaling new businesses. Before joining Piramal, Mr. Jairam was the CFO of Axis Bank. He has handled a variety of roles at the bank and was responsible for driving growth in the retail lending and payment businesses. Prior to Axis Bank, Mr. Jairam served Capital One Financials, a consumer bank based in Richmond, USA, as head new to credit card acquisitions in the US card business. At the start of the career with ICICI Bank, he played a key role in their initial foray into the retail lending business, serving as head business intelligence unit. We also have Mr. Yash Nadkarni. Mr. Yash Nadkarni has a master's in finance from London Business School and a bachelor's in engineering from University of Pune, India. Yash has over 2 decades of investment experience across debt, equity, and special situations spanning India, Australia, and Southeast Asia. As CEO of Wholesale Lending, Yash is responsible for further expanding Piramal Enterprises Limited's wholesale lending business, building a high-quality granular book across different real estate corporate segments, establishing and strengthening key clients' relationships, and using data analytics, artificial intelligence to enable superior underwriting. Before joining Piramal, Yash was Managing Director and CEO of India Real Estate Lending Business at global investment firm KKR. Prior to KKR, Yash was held a senior leadership place at JP Morgan, where he led Asia ex-China franchisee of the balance sheet investment group, and ICICI Prudential, where he set up and led the real estate corporate investing business. Just a bit about Piramal Enterprises Limited, who is the issuer in this place. Piramal Enterprises Limited, the flagship company of Piramal Group, one of the leading conglomerate in India, is a non-deposit taking RBI registered systematically imported NBFC engaged in providing wholesale and retail lending. Piramal Enterprises entered the financial services sector by lending to the real estate sector. Thereafter, it expanded the lending platform to serve the needs of corporate and individuals, with an aim to segregate the business of the Piramal Group. Piramal Enterprises entered into the scheme of arrangement with Piramal Pharma Limited and PHL Finvest Limited. Pursuant to this, pharmaceutical business was demerged from the company, and wholly owned subsidiary PHL Finvest Private Limited was amalgamated into the company. Currently, its retail lending business is primarily conducted through its wholly owned subsidiary Piramal Capital and Housing Finance Limited, for which we did a public issue of bonds 2 years back. As on June 30, 2023, Piramal Enterprises had 424 conventional branches, including 136 microfinance branches across 25 states and union territories across India. As of March 23, the consolidated basis Piramal Enterprises Limited's AUM is 63,989 crore with a net worth of 29,021 crore. On consolidated basis, for March 23, its consolidated interest income stood at around 7,800 crore. Its standalone net stage 3 loan stood at 1.73 with a capital adequacy of 30.31, which is very high compared to the RBI minimum capital adequacy requirement of 15%. Also, Piramal Enterprises Limited has maintained low leverage balance sheet with debt to equity ratio of 1.6 on consolidated basis as on June 30, 2023. Talking about a little bit about the public issue, Piramal Enterprises Limited public issue of secure rated listed redeemable non-convertible debenture for an amount of 1,000 crore rupee with a base issue size of 200 crore and a green shoe of 800 crore is scheduled to open on this week, Thursday, October 19, 2023, and is scheduled to close on Thursday, November 2nd, 2023. However, the issuer has the option to early close the issue anytime in this period once it gets the expected subscription, subject to a minimum issue period of 3 working days by publishing a day's notice in the newspapers. The allotment shall be on the first come, first served basis. Issue is rated ICRA AA stable by ICRA Limited and K AA stable by K Rating Limited. It offers NCDs under 4 tenors, 2-year, 3-year, 5 years, and 10 years with annual interest payment options. The NCD offers attractive coupon rates. It's in the range of 9% to 9.35% across the all 4 series. We'll discuss about the issue structure in detail in the presentation. I earnestly appeal to all our partners to reach out to the maximum number of investors in all categories and let them have the opportunity to invest in such an attractive offering. We have allocated 30% in retail investors up to ₹10 lakh application size. 30% of the issue is reserved for high net worth individuals who are investing in the issue about 10 lakh rupee size. 20% each is reserved for corporate and institutional investors, clearly showing a priority for the individual and the retail investors in the issue. The issue also provides option to retail individual investors bidding up to ₹5 lakh through UPI method. I thank you for taking time out to attend this conference today. We shall look forward your wholehearted support as it always been in the past. May I now request Mr. Jairam to take us through the presentation and tell us more in detail about the business and the company. Thank you.
Thank you, Ajay. Thank you, Ajay, for introducing the company, Yash and myself, and the issue. Thank you, everybody, for taking the time to be part of this call. I'll take a few minutes to talk about the company's overall strategy and a little bit in detail about the retail lending strategy, and then we'll request Yash to come in and walk us through what we are doing on the wholesale side of the business. If you look at our performance over the last year, as of the end of FY23, you had seen a significant increase in diversification. We have been saying for a while that we want to diversify our book to have a greater percentage of retail, and that story has continued to play out quarter on quarter. In the quarter ended March, we had reached 50-50 in terms of the retail wholesale mix. Retail AUM was continuing to grow at close to 50% and was upwards of 32,000 crores in the March quarter. Wholesale, our stated strategy of reducing the exposure of our legacy wholesale business, what we call wholesale 1.0, continued, and we had reduced the book by 30% year on year in the quarter ending March 31st to 29,000 crores from 43,000. In the wholesale 2 book, AUM continues to build up. This is a new book that we are doing in wholesale, then across real estate and corporate mid-market. And we had increased that book to about 2,800 crores by the end of March. Our balance sheet continues to be very strong with the capital adequacy upwards of 30%, as Ajay mentioned before, more than twice of what the regulatory requirement is for us. As we go through some of the other slides, I will also point out that that the information on that is there in this presentation is largely as of March end, which are our audited numbers, except for a few places where we have clearly indicated that they are June end numbers. For more detailed look into our June end numbers, the audience is welcome to look at our presentations, but that is not as part of this issue and our discussions today. In terms of our strategy going forward, we've stated that we want to build an AUM mix of 2/3 retail, 1/3 wholesale. Within retail, our intent is to lend to the what we call the Bharat markets, essentially small town and mid-town India, and in particular, customers with smaller wallet sizes in that market. We think of us as a tech-first and analytics-led business, which means all our business strategies and execution have technology, analytics, and process design right in the center of how we go about things. And all our products that we launch and the way we execute and fulfill on them on the ground are using what we call our phygital model, which is physical fulfillment on the ground, either in the acquisition stage or in collection stage, but digital throughout the middle in terms of the backbone and architecture that we use. We are building a new and very granular wholesale lending book, both in the real estate side and the non-real estate side. You'll hear more about it from Yash in a few minutes. Our liabilities mix has been very conservative. We have always had positive gaps in the last 2.5 years. We have had consistently large positive gaps in our ALM from a behavioral maturity perspective. We have also had very diversified source of borrowing, except that some of the kind of retail originated borrowing has been smaller, which is of course where this issue fits in. We are seeking opportunities for inorganic growth over and above what we can do organically. This is largely because we have large pools of cash as well as large amounts of capital that we have available. And Piramal as a house has historically created a lot of value by engaging in inorganic growth. So those are the 6 key elements of our strategy of what we have been trying to execute in the quarters past. Garima, if we could move ahead. I'll walk you through a little bit of the retail strategy now and how we are moving forward on this. Before we go there, one quick look at the overall numbers of our business. From an AUM perspective, our AUM has been flat at around 64,000 crores as we have degrown wholesale and grown retail. So the overall size of the book has remained about the same at 64,000, 65,000 odd crores. However, the composition has continued to shift pretty dramatically. As you see in the chart on the top right, between FY22 and FY23, the retail wholesale mix has gone from 33-67 to 50-50. As we stated before, we have said that ideally we'd like to build a 2/3 retail, 1/3 wholesale kind of book. And you can see that last year showed a meaningful movement in that direction. The retail book itself has grown by 49% year on year, with a lot of product diversification, which I'll talk about in a minute, to a size of 32,144 crores as of the end of March 31st. The wholesale book, on the other hand, has degrown exactly as per our indications in the past, and the legacy wholesale book in particular, what we call wholesale 1, has come from 43,000 crores to 29,000 crores at the end of March. As that happens, we have also started to build out our wholesale 2.0 book, which as of the end of March was 2,800 crores, making a wholesale book size of 31,800 crores. Let's move, Garima. If you look at the retail book, as I mentioned before, we are a phygital business, physical branches and digital execution. The branches, we have today about 424 conventional branches and about 136 microfinance branches. Again, as of the 424 is as of June end. If you see the dots here, the dark blue dots are largely the branches that came from the DHFL acquisition. But after that, we have continued to open a lot of new branches, and those are the green dots. As you can see, we have made a lot of investment in branch openings, and we have significantly increased our presence both in the middle belt in India as well as in the north, with a little bit of investments on the south, particularly in Tamil Nadu as well. So our geography strategy is very much branch led, and we will continue. You will continue to see this kind of trajectory as you have seen in the last few quarters. What you've also seen in the last few quarters is the emergence and just the early seeds of what we call small developer finance. which is lending to very small projects and developers in small town and medium-sized India, which we believe has a lot of synergies with the retail business, and which can use some of this branch infrastructure that you see by engaging with developers and converting the developer finance business into a retail home loans business. So that's an area of interest as well that has emerged in the last year. We continue to penetrate deeper in the various states where we are present, and the districts that we like, we want to double down and will continue to expand. Moving ahead, if you look at our business itself in retail, we split it into four major categories. Our bread and butter business, of course, is housing finance. So residential mortgage lending to individuals, that's about 16,000 crores, and it has about 55% share in our overall AUM as of March. The second big product we have is LAP to small business customers. This is about 7,000 crores and 23% share in our AUM. The third category is of used car financing, which was at about 800 crores of AUM as of March end. It's a category we like and has been growing quite nicely for us, so we have large aspirations for it. It currently has a 3% share in our AUM. Finally, we are involved in the unsecured lending business, where we had close to 6,000 crores of AUM. The unsecured lending business consists of salaried personal loans, unsecured business loans, digital loans, and microfinance. Those four product categories together constitute what we call unsecured. Unsecured was, as of March end, 20% of our AUM. This makes the total AUM of roughly 31,000 crores that we spoke about before. The products are very wide in range. As you can see, we have continued to roll out newer products over time. We believe a multi-product business strategy is the right strategy for a lending business in India, both from an opportunity sizing standpoint as well as from a risk management through the risk cycle standpoint. So we have continued to launch a lot of new products. I wouldn't go into details, but as you saw on the previous page as well, we have products ranging from the 13,000 rupee microfinance to to a large LAP, which could be a couple of crores, or a housing which could be 40-50 lakhs. So there's a large range that is there. However, our sweet spot is in the smaller ticket sizes. So like an 18 lakh ticket size in housing, or a 20 lakh ticket size in LAP, etc. So the smaller end of the segment is where we thrive, and that's where we have done well in the prior years. Moving forward, the last point I want to make is on how we work. So far, we've been talking about the what. There's a little bit of the how. The three things that we like to think of as central to our way of working is technology, analytics, and process design. So we build a lot of technology ourselves. We have a fairly large technology team and engineering team, which writes most of our software requirements ourselves. We are an entirely cloud-based business, which means we don't own any servers of our own. We have originated in the cloud era, and so we are able to keep very light cloud-based tech infrastructure. We have used a microservices-based architecture in tech, which allows us to be very quick and agile in terms of changing requirements and changing our software very, very quickly. From an analytics perspective, we have about a 200-member big data analytics team, well versed with the latest analytic tools and techniques, and very equipped to write code in Python or R, some of the more advanced analytic tools that are out there today. And based on that, we use analytics in all our core decision making, whether it is in underwriting or line management or collections. Finally, on process design, we also use process design very rigorously. We are big fans of the OKR methodology and of the agile way of thinking. And just like you will see with a lot of startups in the ecosystem today, we are also an entirely agile-led machine, and we run our business through 30 plus agile squads which are cross-functional in nature. So our way of working is very different than a lot of traditional NBFCs that you will see as well. I will stop here and I will pass it on to Yash to take us through some of what is happening on our wholesale lending business. Yash?
Thanks, Jairam. Good afternoon, everyone, and thanks a lot for taking the time to join us today. I run the wholesale business for the firm, and I'm going to briefly talk about our wholesale strategy over the next few slides. I think part of what you see in front of you is something Jairam's already covered nicely, but I'll just summarize it quickly. In line with our stated strategy over the last 5 or 6 quarters, we have made consistent progress in reducing our old book, or 1.0 part of our business on the wholesale side, as we call it, to make it more de-risked. Consequently, as in March 2023, our old book stood at about 29,000 crore versus 43,000 crore as in March 2022. Which is basically a reduction of about 33% over the 4 quarters to March 2023. But simultaneously, we have also been building a new and diversified and granular wholesale book across real estate developer financing strategy, something that we have been doing for years, but also across a corporate mid-market lending piece, which we have started building a few quarters ago. If you can move to the slide, Raymond. The new book that I just referred to stands at about 2,800 crore as at March 2023. Of this, real estate developer financing, which we started a little later than the corporate mid-market lending side, stands at about 1,300 crore, while the remainder 1,500 crore is on the CMML, on the mid-market lending side. Going on to the next slide. On the real estate side, our target is to lend against mid-market residential projects across top 10 markets. There is, we believe, a big gap in the lending space, having seen the consolidation that the markets have. And we actually think that we are well equipped and positioned, given our experience and track record in the space, to step up and fill the gap. So that continues to be a big portion of our book as of today. And as we execute our strategy, will be at the center of the wholesale book. We're also developing a small developer financing strategy, something that Jairam alluded to as well in his speech, which effectively is all about funding smaller developers for the smaller projects at the outskirts of tier 1 markets and select tier 2 markets, where given our retail franchise, we've got a good presence across, but also where we believe the competitive intensity is less and the risk-adjusted return is better. So that would be the second leg of our strategy as far as the real estate piece goes. On the CMML side, we are looking at lending to small ticket corporates, pretty much across a variety of sectors, including cement, shipping, power, pharma, IT, etc., which basically provides granular diversity and also sectoral diversity to the wholesale side of our business. In our wholesale business, we follow robust analytical screening and underwriting approach, have very hands-on asset management expertise that we have built in, so that we actively and timely manage the portfolio risk as we build the new strategy, and also have a very strong governance and approval structure, which is all led by technology and appropriate processes. I'll just hand over back to you, Jairam, to take the rest of the section.
Thank you. A quick look on the liability side and how we manage the borrowings. These numbers are as of June end. You will see that from a type of instrument standpoint, we have 58% of our borrowing happening through bonds and 27% in the form of loans. I will point out that when we did the DHFL acquisition, there was a material part of the transaction that was in the form of new bond issuance that we did as a firm, and that was subscribed to by the erstwhile lenders of DHFL. And the public issue, if we there's a small amount there. It's a very small sliver. And if you come to the type of lenders that lend to to us. Clearly, banks have been dominant, as has been the case with most NBFCs in recent times. Banks are a dominant part, 56%. We have great relationships with our bank partners, and as one of the largest NBFCs in the country, we have been a big part of most of the large banks' portfolio, and we continue to have that great relationship going. Mutual funds are at about 8%, and insurance at about 9%, and foreign institutional investors, etc., are a small sliver of the type of lenders that are there. As you can see, there is a lot of diversification, both in terms of lenders as well as in terms of the instruments that you can see on our borrowing table. We have over time wanted to continue to increase this diversification, and issues like what we are discussing today are a way to get even more diversified on this and meet some of the growth aspirations of the firm. At this point, I will hand over back to Ajay to talk about the details of Tranche 1 that we are going to release today.
Thank you, Jairam. Thank you, Yash. Just a little bit about the issue details. The issuer is Piramal Enterprises Limited. It's a secure rated listed redeemable non-convertible debentures for a face value of 1,000 rupees each. The other lead managers in the issue, including JM Financial Services, AK Capital Services, JM Financials Limited, Joama Wealth Management Limited, formerly known as Edelweiss Securities Limited, and Trust Investment Advisors Private Limited. The face value is 1,000 rupees for the each debentures, amounting to 200 crore as a base issue size, with the option to subscription up to rupees amount of 800 crores. 10,000 rupees is the minimum application size, which is a 10 NCD, and multiple of 1,000 rupees thereafter. The issuer is rated AA by ICRA and CARE. The listing is on BSE and NSE, both the stock exchanges. The opening date is 19th November, that is Thursday. The scheduled closing date is November 2nd, that's again Thursday. But the issuer can close it at an early date once they get the sufficient subscription to the issue, giving it days notice, but minimum running for the 3 working days. There are 4 series in the issue. Series 1 is an all fixed coupon rates with the annual interest as a frequency. All are secured. The first series is a 2-year tenor with an interest coupon of 9% per annum. The second option is a 3-year tenor with a coupon rate of 9.05%. The series 3 is a 5-year tenor with a coupon of 9.20%. And the 4th series is a 10-year option with a coupon of 9.35. As we go the higher in the tenor, the coupon rates keeps increasing. There is no put and call option. It's a straight maturity for 2-year, 3-year, 5-year, and 10 years. That's about the issue.
Ajay, sorry, one quick errata. If you could just go back to slide 23, please. Folks, I want to apologize. There is a typo on this sheet. The issuer is Piramal Enterprises, not Piramal Capital and Housing Finance, as mentioned here. Our apologies, just to make sure that there is no confusion. The issuer is Piramal Enterprises Limited.
That's right.
Ajay, back to you.
The next slide. The other agencies in the issue, as I mentioned about the lead managers, registrar is Link in Time. The debenture trustee is IDBI trustee. And rating agencies, as we mentioned, ICRA and CARE. That's all about the issue. And the floor is now open for the question and answers. We are happy to take questions, and the management there with us. We can answer any of the questions which audience might have. The first question, the financing industry is becoming increasingly competitive. So what strategy do you have in mind for the company's future growth? Do you plan on introducing new products and services for the customers in the future? As I rightly remember, Jairam has covered that, but again, would like to hear from Jairam.
Yeah, so thank you for the question. Yes, you're absolutely right. The industry is becoming competitive. I will also state, though the industry is also getting larger, there is a lot of growth. India is a big growth market. So as the country grows to a $10 trillion economy from $3 trillion, the financing industry size will correspondingly grow multiple times. So there is a lot of opportunity in front of us. So while it is important to keep the competition in mind, I think it is even more important to keep the size of the pie in mind. It doesn't matter how the pie gets split. If the pie grows at the rate at which Indian financing industry is likely to grow, I think everybody will benefit. Having said that, from our strategies perspective, we continue to execute on the strategy that we have articulated in the past and publicly, which is a balanced book between retail and wholesale with a multi-product strategy on both sides. And multi-product in retail would mean both secured and unsecured products, and multi-product in wholesale would mean both real estate and non-real estate offerings. Now, as far as new products and services are concerned, firstly, from a services standpoint, we are a lending company. We want to remain a lending company. So I don't think there's a whole lot of kind of new services beyond that we should be thinking about. In terms of products, we always launch new products. You saw the number of new products that got launched in FY23. In FY24 as well, we have already launched some, and you will see a few more. I'm not at liberty to talk about the specific products that we would want to launch in this year. But yes, our strategy of multi-product retail will continue to see introduction of new products every few quarters.
Thank you, Jairam. The next question is from?
And unsecured as well. There's a little bit of MSME segment exposure there. So that's the way our product mix is right now. So about 80% secured and 20% unsecured as of March end.
This predominantly about the retail loan portfolio. The question is about MSME as well, which probably...
No, MSME we do, Ajayji, within the retail segment.
Okay.
So that is the right place to actually look for that business. In our wholesale business, when we do mid-market lending, that is actually much larger than MSME customers. Those are customers with annual revenues of at least 150 crores. So they don't fall under the MSME category as defined by the regulator or by the government.
Understood.
And since you talked about wholesale, all the segments within the wholesale lending spectrum are secured loans. I just wanted to add that. And if secured, that basically means that given our target of 2/3, 1/3 retail wholesale, 33% of secured on the wholesale side would get added to the mix of secured and unsecured loans.
Correct. Do you have any more question? What's our average borrowing cost and NIM?
Right. So the average cost of borrowing on an incremental basis today is not very different from the rate at which we are offering the issue. So somewhere in this 9.25 kind of range is where our average borrowing is coming on an incremental basis. If you look at our stock, our average cost of borrowing is lower. Obviously, it's more like 8.7, 8.8%, something like that. Garima, correct me if I'm missing it. Is on the full stock. Our yields are about in terms of new business yields are about 13.5% on the wholesale side, 13.5, well, maybe a little bit more on the wholesale side, and roughly 14% on the retail side as well.
So it's a 4.5-5% NIM, right?
Sir, NIM में तो आपको leverage लेना पड़ेगा. Margin, you can say yes.
Right. Perfect. Next. What are due diligence practices you follow while lending to the construction finance and real estate?
Well, yeah. So I just want to answer that. So look, I think our diligence process that we follow is fairly exhaustive. There are different parts that we cover, right? The diligence starts right with the understanding of the borrower group, which has got different aspects. The financial analysis of the borrower group, the analysis of the softer factors in terms of the number of years of experience, relationships with different stakeholders that the group has, the experience of having delivered similar projects as to what we are going to fund and so on and so forth. So that's really on the borrower group side. Most of the lending that we do on the real estate financing side are sort of assets ring fenced in the underlying SPVs. So there is a fair bit of sort of financial, legal, and and the structure analysis that we do in terms of transaction structure, SPV or not SPV. We actually do a fair bit of analysis of the underlying project in terms of the historic performance, legal analysis, analysis with regard to the compliance of various sort of processes, be it regulatory issues or be it secretarial, finance, accounting, etc. Right. So the diligence package that we actually implement is pretty exhaustive. As part of our underwriting, we also actually have technical experts. We have technical expertise within our group, but we also hire independent technical experts who advise us on the the cost and the timelines involved in the construction projects, which basically forms the basis of our underwriting. So it's fairly comprehensive.
Yeah, as we understand, this is a fairly exhaustive process, but can you just quickly guide us in terms of how much time it takes to approve a loan, especially in the real estate side, completing all the process?
Well, from the day we actually decide to pursue an opportunity to a day we lend, actually make the first disbursement, typically involves anywhere between 6 to 8 weeks. That's the kind of timeline, which is normal. In some cases, the commercial discussions as well as in some cases diligence may take much longer, which elongate this process to 12 weeks.
Understood.
But rarely do we finish a deal before 6 weeks from start.
Any more questions? What percentage of your total loan book is into the real estate lending and construction finance?
You mean to say what percent of the total book? I mean, 50% is wholesale and 50% is retail. So 50% is really what we are looking at, and significant part of this 50% is real estate. Because if you look at the composition of the real estate book today or wholesale book today, we've got 29,000 crore as at March 23, which is the legacy book, and the new book is only 3,000 crore. So predominantly real estate backed wholesale book.
Understood. So what percentage of your total loan book that we discussed, can you please brief us about your borrowing profile and how you manage ALM?
Yeah. So the ALM management, I refer to this a little bit in our conversation. It's a very conservative ALM management strategy, mostly driven by what we expect outflow maturity to look like. So we start with the maturity profile of our assets, and particularly the cash expectations, cash outflow expectations that we have, and that drives our ALM, because the principle is to do maturity matching, and with that principle in mind, we try to create our liability strategy, because a lot of our liabilities are a lot of our assets are longer gestation, whether it is on wholesale construction projects or in retail in terms of housing loans, etc. So we do tend to prefer longer duration financing to actually support that, but we do behavioral analysis to figure out on the asset side how much cash should we expect in terms of prepayments, repayments, etc. In every monthly and quarterly bucket. Based on that, we do our maturity matching, because we want to remain conservative and don't want to fall short. When we do this analysis, we try to keep a positive gap in the early buckets all the way up to the 2-year bucket or even the 3-year bucket. We like to keep positive gaps in our ALM, so that we know that that our inflows are materially higher than outflows. Now RBI, of course, in their norms, etc., allows up to negative 10%, but we don't have negative even 1% in any of our buckets across all our ALM categories. And from a short-term to long-term mix perspective in terms of borrowing profile, we already spoke about two other aspects of borrowing profile, which is instrument mix and borrower mix. So I'll not go into that. The last point, which we didn't have on the slide, but which is again has been in the public domain always, was on kind of short-term, long-term, and we are largely long-term oriented from a borrowing mix perspective, with roughly 90% borrowing in the longer term, i.e. greater than 1 year.
Understood. That's all about the questions, and thanks a lot, Jairam. Thank you, Yash. I thank everyone for joining for this webinar. Let me take a few minutes to conclude the webinar by highlighting the key aspects of the issue. I would like to reiterate the issue terms wherein the base issue size is 200 crore with a green shoe option of 800 crore, making it a total of 1,000 crore offering. The issue offers a very simple structure in 4 tenors of 2 years, 3 years, 5 years, and 10 years, with a coupon ranging from 9% to as high as 9.35% for 10 years. And the interest payment in all these options are annual rest. And needless to mention that the issue is targeted towards the retail and individual investors, and we have kept a very high reservation, which is 60% of the issue is reserved for retail and HNIs, typically the individual investors in the issue. As we all have heard and seen the attractiveness in the offering and the safety of the issuer, the offering from Piramal NCD, may I now request your wholehearted support by reaching out to all segments of the investors class, especially the retail and individual category. There are attractive incentives carved out for the distribution channel and shall be conveyed to you by consortium member. You are free to reach out to any of the consortium member out of the 4 lead managers. You may reach out to the issuers, lead managers, consortium members for any information or clarification about the issuer. Thank you all. Thanks a lot for joining this webinar. Thank you.
Thank you, everyone.
Thank you, everyone.
Thank you, Mayur.